Welcome back to Capital Connection. Let's have a look at how European markets have fared over recent days or over the previous session on Friday. We are expecting to go a little bit lower today, but this was the picture on Friday. We, of course, were seeing all the pictures coming out of Egypt of the violence on the streets there, and that got some people nervous. As you can see, we moved lower on the FTSE and on the CAC, and not quite so much lower on the DAX, the SMI and the IBEX. In terms of today's opening calls, then, we are expecting to go a little bit lower once again at the start of our trading day, but not by a great deal. We're called down a few points on the DAX and around 40 points lower on the FTSE. David Costa is Dean at Robert Kennedy College and joins us live from Zurich now. David, thanks for coming to talk to us. I mean, we're trying to work out, as we see the worrying scenes unfolding in Egypt, at least in the short term, we're trying to work out for the investment community how much we should focus on that and how much we should focus elsewhere on the strength potentially continuing in the Chinese story and perhaps a better picture coming through in the US data as well. What's your view?
A very good morning to you, Anna. Yes, I think it's very early to say if the situation in Egypt will indeed affect the market as much or if it's just a temporary reaction. One thing is certainly sure is that some of the reasons that are playing very well for the US, which is a weaker dollar, which helped the economy through export and increase the consumption, is in a way penalizing some of the emerging countries like Egypt, and we have seen that before in Tunisia, where the increase on commodities plays a very important role because in those countries the percentage of personal income spent on food is much higher. So we have seen inflation in a way playing a very important role already here. And so still, because of the uncertainty in Egypt, I think it is a moment where we have to look for stability, we have to be cautious. We haven't seen the data, we have to wait this data obviously on Friday, job reports from the US, but I don't expect any major positive news from the US, at least in the short term.
David, you mentioned the commodities, and you also are mentioning some inflationary risks, but people have been flocking to commodities lately. Would you be switching out of commodities right now? Would you be staying put? What's your strategy?
No, I wouldn't get out of commodities, absolutely not, because inflation is certainly going to play an important role in the next 12 months and ahead. I have seen a report just Friday from Deutsche Bank which even forecasts that inflation in the US might even double this year. So getting out of commodities is certainly not the right strategy at this point. But we have to be cautious that in the case that commodity increase that much or still have a very good year like last year, that will impact equities. So it's a bit of difficult to play both in a portfolio in a way to reach a certain level of stability, so to speak.
David, good morning to you. This is Chloe. There have been some suggestions by some of the people that we've been talking to here on CNBC this morning that if more geopolitical tensions persist, then we could in fact see a strong dollar and also plenty of strength going into commodities and also soft commodities as well. Is that something that you would subscribe to?
Yeah, it is certainly a possibility. I don't think that commodities will be let go much higher together with the dollar in this tandem. I don't think that is going to happen. But I do think that commodities have still some room to go higher, especially if the situation in Egypt doesn't reach a solution pretty quickly. And if that doesn't happen, we're going to see higher levels in gold and also on oil. So I think staying in commodities is certainly important. A stronger dollar is possible in the event that we start to see even positive data from the US. I don't expect it in the short term, but sooner or later might come. So it is certainly a possible scenario, but not one I'm particularly likely to wait.
David, we've seen the central bank in Switzerland battling against the rise of the Swiss franc over recent months. It seems that with renewed tensions in currency markets and a risk-off environment, that rise in the Swiss franc could continue. What's your expectation there?
Yes, the Swiss franc rise, in my opinion, will continue. The central bank has little to do. We have seen incredible losses last year because of the intervention that tried to sort of reach some stability with the euro. And for that reason, I also think that some of the Swiss equity, like small and mid-cap companies, might provide some more stability in the portfolio than other equities, seeing that in Europe we have still uncertainty, and the US there is to some degree uncertainty, other part of the world the same situation. I think in Switzerland is less affected by all those factors. So by going into those equities, perhaps we rely on a stronger currency and also more stability.
David, thank you for joining us today. David Costa from Robert Kennedy College in Zurich. Let's set you up for your trading.